Brian, we've talked about simple gifting strategies. What are some of the more advanced gifting strategies?
Yeah, with a gifting strategy to reduce estate taxes, sometimes we don't know what the estate tax exemption is going to be. I mean, during my lifetime, I remember it's been, I think it was $100,000 before I entered public accounting. It was $600,000 you could die with and not pay the estate tax for a long, long time. There was $1 million, $2 million, $3 million. It went up to $12 million. It's supposed to go back down again from there. We don't know where it's going to end up. And so a lot of people want to get their estate value down just in case that exemption amount gets lowered, because the estate tax can be 40% of all of your assets you've accumulated during your lifetime. 40% could go to the government. And I've seen that much higher. The estate tax has been way higher, even more than twice that. So that's a concern for a lot of people. And some people don't want to give away their cash and their liquid assets and so forth if they're going to give something away. They might have a company though, or an ownership interest in something, and they'll give percentages away. So that's what we're talking about here.
Brian, I've heard this term lack of marketability discounts. What is that?
Yeah, so you can have minority discounts and lack of marketability discounts. So what that means is, let's say I had a company, a business that I owned 100% of, and it's in a LLC, a limited liability company, or a limited partnership. I might decide I'm going to give a couple percentage points to each of my kids each year to not have to file a gift tax return. But let's say the exemption is $15,000. Well, if I give $15,000 worth of that company, it's not really worth $15,000 to the recipient, because the recipient goes, well, I have part of this company, but I have no control, so because I have a minority ownership, and I can't sell it. You gave me a contract saying if I take this gift, I can't sell it. So I can't even sell this thing. I can't control anything. I have no votes. So that $15,000 isn't really worth 15. And the IRS agrees with you. It's not. So you'll be able to claim a much higher gift out of your estate. You can give more before it counts towards the $15,000. I know it sounds a little complicated. It is. But it's a strategy you can use if you have part of a company. Another thing about that is, let's say you have a limited partnership and you want to gift it. Well, 1% of the ownership would be the general partner who has the votes, and all the limited partners might own you might gift over all the years 99% of a company. And that 99% ownership gets together and say, we want our money. We want to sell the asset. Well, the general partner says, all right, let's take a vote. I say no, and I have the only vote that counts. So, no, we're not selling it. Even though 99% of it has been gifted, you still can maintain control. So that's that lack of control, minority interest piece of that. So there's interesting ways you can keep control of assets, get money out of your estate, get it out quicker, using these lack of marketability and minority ownership discounts. You can get money out of your estate quicker to get to your intended results sooner.
So clearly, Brian, this is complex, so this is one where you might want to get some good advice on this. Thanks for telling us about advanced gifting strategies.